Hi, my name is Stephen Bryant, and welcome to Zero to a Million, the website where we're focused on building wealth through investing and trading. And today, I wanted to do our first video that I'll post to the blog, and it's going to focus on a couple of stocks I wanted to look at, and there's three. I wanted to look at the USO ETF, which tracks oil. I wanted to look at Apple Computer, which is one of my favorite companies, and also Costco. And in the process, I wanted to introduce you to a couple of the technical indicators and tools that I use when I'm performing my analysis. So the first security that we have up is USO, which is the US oil fund. It's an ETF that tracks the price of crude oil. It typically tracks it at about $28 less than the price of crude. So if you look at this right now, you can see over here that we have a price of 116.82 in terms of how expensive crude is, or excuse me, how expensive this ETF is. You add about 28 to that, and that tells us that the price of crude is about 143, 144, somewhere in that ballpark. Now, the point and figure method is really an easy method to read, and that's the method that I use over here. Basically, a column of X's is rising price, and a column of O's would be declining price, and it's always read the most current price information is going to be in the rightmost column. So we are currently rising in price. The point and figure method, you can look over here, it has an up arrow with 121. The point and figure method is also very easy to get price targets off of, and we created a price target way back in April, March timeframe that told us that we were going to get to 121 on this particular ETF, which would have been hard to believe when it was around 87. But 121 is, we're not too far from that number now at 116. But again, if you add about $28 to it, you get 149, or call it 150. So when you hear analysts on TV saying that the price of oil is going to go to $150 a barrel, they're using a number of different methods, technical methods, to come up with that number, and I'm sure that more than a handful are using a point and figure calculation, as we've done here, to come up with that same number. So basically, we have confirmation of that number, and in fact, that number's been in place since March of this year. Now, the other thing that we look at is down here is a different point and figure chart, and that tells us the relative strength of this particular stock versus the NASDAQ index. And the reason we do this is if it's in a column of X's, then this tells us that this particular security outperforms the NASDAQ security, which is what we want, because if it's not, if it were in a column of O's and it's underperforming that index, then we'd be better off just buying that index. So at a glance, we can tell is this something that we even want to entertain being in or not. So this tells us yes, it's outperforming the index, and this tells us that we are in an uptrend. Now, the downside about this is our most current price target is 121. So without a new higher price target, I don't know if we would bet, because there's only $4 or $5 to be made on the upside from where we are. So yes, it's very exciting. A lot of analysts are talking about it, but if you weren't already in, you may have missed the move unless a new bottom comes into play. We did get a new buy signal on oil the beginning of June, call it June 5th, and basically you can see oil has been in an uptrend since about the 11th of February. It's been steadily rising higher and higher and higher, as you can see by this rising line there. So that's oil in a nutshell. I don't see it pulling back quite yet, but my gut tells me that it has to pull back in order for us to get some relief in the other indices. So maybe when we get to that 150 mark on the news, or 121 in this particular ETF, we'll start to see a pullback. And what we would look for there is a little down indicator, a little sell arrow. And once we get that, we know that oil may be on its way down. And there'd be other things we'd look for as well. So this would be one that we repeatedly look at. Now, an interesting thing to note, and this is something I've come to believe, is it doesn't matter whether the market's going up, whether the market is going down, or whether the market is going sideways. As long as you know which way the market is going, as long as you can track the trend and not be surprised by the trend, you can make money. And so that's what we're looking for. Right now, what we're saying is that The time to have gotten into this, if you wanted to play it, would have been in the March-April time frame. And then your risk-reward ratio would have been really nice in terms of the upside potential versus how much you might lose. Right now, you might make $5 based on the numbers. So you could bet that it's going to go higher than that. But again, we want to be disciplined and we want to follow what the numbers are telling us in addition to what the trend is telling us. So let's look at another stock, one of my favorite stocks actually, and it's Apple Computer. And basically, Apple is one of these very interesting ones. I think emotionally, I wish it was doing much better than it is. But unfortunately, it's doing something that's a little concerning, and we just have to see how it plays out. So again, we'll start over here in the bottom left corner. We can see that relative to the NASDAQ, it's doing pretty well. Okay, we'll continue to look at it. Just this, in July, we started to go up in price a little bit. But this is very interesting because we have the columns of X's are lower than the preceding columns, and the columns of O's are lower than the preceding columns of O's. That's indicative of a downtrend. And in fact, you can see if you start looking here, we're kind of trending down. And we've had a couple of sell signals on that downtrend. So right now we have to be a little cautious because we are in a downtrend on Apple Computer. We have a point and figure price target of 146 if it continued down, which is going to be right in here. We had some support before. So that's where we would expect to pick up some support again. So that number seems to make sense. The question is it going to come all the way back there, or is it going to pause in here and then take off? So that's something we have to watch. Now, on a longer term view for Apple, here's the concerning part. Actually, it's interesting and it's concerning. So let me zoom all the way in here. Apple, from the time that it was released, I mean, it basically did nothing for a decade, almost 2 decades. It stayed very flat. And then, all of a sudden, in 2004, it started to take off. So it started to take off big time in 2004, and congratulations to anyone who was in at that point. Now, what's interesting is we had you can consider this a low, this a high. We had a 50% retracement. So we lost 50% of that move, and now we were on the way back up. Well, that's fine. The key thing here is we do need to have a peak that gets us above this peak. So now with this retracement, we have a range that we're bound by. If it gets above this peak, then our uptrend is still intact. If we drop below this peak, then we are definitely in a downtrend for Apple Computer. So right in here, we are in a trading range, and we're not going to know where it's going really until we break out of that. So Apple's one that we can trade on a shorter term right now. But on the long term, we probably want to sit out and see which way it's going to break before we do anything. So I'll zoom back out on that. In the short term, there is still more selling pressure than there is buying pressure, and that's indicative both on the point and figure chart of us being in a downtrend and also on my directional movement line. This particular red line is higher than the blue line, so you can think of the red line as selling pressure, the blue line is buying pressure. So there's a lot more selling pressure on Apple right now. So ideally, we'd like to see the blue line above the red line if we're going to be in an uptrend. The last stock that I want to look at is one that I'm actually considering taking a position in at some point, whether I wait for a pullback or I do some form of dollar cost averaging, and that's Costco. Costco actually just gave a buy indicator on my moving average line here at the end of June, beginning of July. They're outperforming the NASDAQ, so that's something we want to look at. And this column of X's has now exceeded the prior column of X's, so we are in an uptrend on the point and figure chart. So again, that looks good. But what I like about Costco is when you look at the historical view, we can see that Costco has been in an uptrend basically since August. Actually, if you go back further, since December of 2002, or August of 2002, and it has just been in an uptrend ever since. So I'd expect, could there be a pullback? Yeah, as long as the new lows don't get below the prior lows, Costco's probably one to be in for a while. They look pretty solid, at least on this chart. So that's what I wanted to look at today. So we've looked at three stocks. As we go over time, I definitely like to hear your questions. I know not everyone understands all the ins and outs of technical analysis, and I also know that there's a lot of people who are more expert than I am in terms of the different indicators and techniques, and I'd love to hear from both camps, and hopefully we can get from 0 to a million together, and we can get there quickly. So until next time, thanks for joining me. Hope to catch you soon. Bye-bye.